Even on the issue of net neutrality, a leading telecommunications provider announces that when sun can be free, then and when air can be free, then why not the internet? And today they have a leading advertisement saying that if you subscribe to our communication service, that means if you take them as a telecom services provider, then you get internet for free. If you go into detail and try to understand what are they giving for free, you'll find that there are some select websites which you can access for free, which they call as the most frequently visited websites. Now, who, according to whom are these frequently visited? And what is the purpose of internet? One of the major things that internet enables you to do is to do research into issues of importance, which may be in any part of the world. You do not restrict your research into few specific websites which may be of interest to some people but not to you. So the purpose of this telecommunications provider is merely to get you in their scheme of things, to market it in such a manner that it bring you in for free for certain websites, and later on you pay a handsome sum for them for to be able to access the remaining websites. That's not what the purpose of internet is anyway. And thus the plot and the scheme of things centering around net neutrality deepens even further. Coming to the global stock markets, you can see many world stock markets have reached all-time high. As I mentioned many times before, I expected that there would be a great bull run in the month of February 2015, as has exactly happened. I do expect you may see a few more days of rally, and now I think the tide will begin to turn again. So be positioned yourself, because I'm expecting some turbulence and some good downside in the first week of March and thereafter. Coming to the price of oil. Now, oil has fallen about 8 to 9% from its highs, recent highs, and there are issues that the supply is in excess of the demand to the extent of almost 1.5 million barrels of oil per day. Even that has not been sufficient to really bring the price of oil down drastically. So, what will? Along with this price of oil, the fact that the supply is in excess of demand, another factor is that you find that the storage capacity is beginning to fill up. So you have almost like a storage of about 150 million barrels of oil existing at this point of time, which is almost equivalent to the 2009 financial crisis, when demand all over the world had really come down dramatically. So you can see that oil could be under tremendous pressure and could begin to recede very shortly. In about few days, you can start seeing further lows in the price of oil. Now, many global stock markets have reached all-time highs. One of them is the London FTSE. Along with the Nasdaq, it had made highs, and both the Nasdaq and FTSE have recently crossed their all-time high. In fact, you find that the FTSE briefly crossed 6,900 mark very shortly, but because of poor HSBC results, it came back. Anyway, the issue is whether this all-time high and going beyond is going to sustain, or is it just a short-term phenomenon? Well, do not forget the fact that the parallels with 1999 are very different. At that point of time, Nasdaq was running at an annualized rate of something like 35% a year, whereas the FTSE was also running quite fast. Now over the last 10 years, both Nasdaq and the London FTSE have taken some time to come down. As a result of which, you can analyze and you will find that the Nasdaq has now gone up by just about 10% annualized over the last 10 years, whereas the London FTSE has gone up by just about 5%. So they really are not into as much of a bubble territory as they were in 1999 2000, which means there is scope for them to rise further. But do not forget the fact that oil and gas is still a very important composition of the London FTSE, which makes it prone to setbacks in the price of oil and gas producers. But as I just mentioned, although I expect the oil and gas prices to fall in the near term, I'm expecting most commodities, including oil, to start rebounding from from the summer of 2015, say about June or July of 2015, which would which would mean that there would once again be a rally in oil and gas stocks. So position yourselves accordingly. The world of investment looks to be quite appealing at this point of time, but it is fraught with many risks as well. Looking at the Indian stock market, there's a very important event of a union budget coming up by the end of this week, which can have a major repercussion. You have economists all over the world writing about what they expect from the new government to do, which can jumpstart the economy. The Indian economy remains robust, but on the ground level, more needs to be done by the new government. So, what do I expect from the new government in this budget? I expect lots of tax reductions, especially the indirect taxes like the excise duties to come down quite dramatically. But I do expect one important provision which I believe could jolt the Indian stock markets as well. And to some extent, this will have an impact on the world stock markets as well. As you know, or as you are probably aware, long term capital gains are exempt in India if shares are held for more than 1 year. I believe there's a very strong chance that this 1 year could go up to 3 years. And this could come to a very big jolt for investors, not only the retail investors within India, but also the foreign institutional investors which are here to play for the long haul. So position yourselves accordingly. And I believe that after about this week is over, you will see great turbulence in world stock markets once again, and I see downside erupting thereafter. As I had previously mentioned, February should be bullish, which it has been, but I'm not so bullish about March. And therefore, stay calm and try to get out of the stock markets before the new downside starts. Take care. Happy investing. Bye bye.